Hi everyone, Nic Chahine here for Benzinga. MarketFi.com. I have created income with option spreads. The recap of this week ending March 14th and looking into next week, just to give you a little heads up as to where I think things are going. We had a pretty eventful day, although the scoreboard doesn't show it today. Regardless, the events over the weekend are driving everything, in my opinion, although CNBC and all the other experts are not sure if it's China or not. Anyway, the China slowing down issue has been on the table since last year. If you recall, for a while there, we had a few days even we were discussing sixes as far as growth, 6.5. When somebody slipped it one day, and then the next day they said, no, 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 I meant 7.5 or whatever. So the issue has been on the table, slowing down China for a while. Suddenly, everybody remembered? I don't think so. It's a binary event, and you can see it in the fact that the major indices were down based on the biggies being down big, like Google, Apple down 1.5% or whatever, and Priceline 2.5% almost, and other momentum stocks. Whereas the small caps, you see strength everywhere. I posted a chart, maybe I'll be able to visit it, and I'll show you strength everywhere. I shall just do it right now. If you look on the heat map for the Russell, I still have it on healthcare. It was up actually 0.4%. Mid caps were up, so there's strength everywhere. So the fact that we're selling off is based on fear of one event, and it's people covering their butts in just to survive Monday open. So that's my opinion as to the Monday open. If with Fizzle, if the reaction from the West, not so what goes on in Crimea, because we know what's going to go on in Crimea. Putin is already in there, and the vote is already conceded as it's going to be yes, let's go join the Russian, uh, let's become Russian. So the only variable is how will what will Putin do, and how will the West react to it. So in my opinion, it's going to come down to that, and we may get a peek of it on Monday afternoon, given the time difference, I believe, here in the U.S. Anyway, so let's go through the rundown. Although it's not going to be the typical run through, because the events are binary. So I'm going to go through it as if it was a shopping list, and see which names I can use next week in order to make my month. I'm lining up a few trades to try to make my month next week, if it plays out the way I see it. Okay, just to recap the day, today Apple and Google traded almost exactly the same way, except Apple closed a little better. But if you can see, we opened straight down, touched the day low, and then recovered really hard, and then trickled down all day. Look at that, same here, recovered real hard, trickled down all day, except Google went into the close also at the lows, as opposed to Apple rebounding a little bit. Open interest played a little bit parts in it. That was the peak, I think, because Google had a lot of 1190 puts that needed to be settled out, so that's the run up there. I can imagine that the same deal with Apple. But the overall exchange of money went because of yen going up, the 10-year collapsed and then recovered, though, in the middle of the day. And then the yen and the markets were trading in inversely, tick for tick. And if you put it on a screen, you can see it tick for tick. Small caps tried to break out a couple of times. This is one time, and they tried here again, but they didn't have enough volatility to be able to follow up with a further breakup. I mean, 0.44% green on a day like today is pretty impressive all by itself. SPX, if you look at it, you can overlay this is the market, Apple, and Google. If you overlay them, they look about the same, right? Priceline took a beating today. One of the names I like for next week, provided markets stabilize. Okay, so now we're looking at the indices. If I look at the SPYs, the SPX, it's starting to look like the RUT, which is a small cap of last year, this potential inverted ascending scallop formation, which if it stops here and starts recovering, and if it closes above this level, then there's another leg up. So there's something to be said right here. If we can hold next week. And so far, unless we have a disaster over the weekend, we should be able to. The fundamentals have not changed, people. That's my opinion. The SPX, if I look at the small caps today, they have a green candle, a decent candle to boot. So it's at a level where it broke down before, but now it's coming up to it on a bad day. So if we don't have a disaster, I expect Monday. I expect it to be able to recover that level as a base, instead of a roof. All depends on the binary event. That's why I'm calling people covering their butts. And the VIX, of course, spiked today. It had one, two, three, four, five, six attempt at this level, whereas three, so basically we're at 50-50 almost now, or at least three times where it poked above it, but not for long. So as long as we don't have a disaster on Monday, we should be okay there. Let's dissect Apple. It's I still feel like it's going to defend the 505 level just because of what happened recently when the company came out and started buying even the open market. Amazon, what a champ. Two green candles on two massively unstable days just because they raised the price of Prime service. So if we stabilize next week, this guy will want to recover that spike and then some. So I will be buying lotto tickets as far as calls in Amazon next week. I won't chance the downside, although I may, but I'll be more interested in buying some upside calls. Baidu, I have a funny note about that. Okay, Baidu, I like to go long it, but I don't want to catch a falling knife. It's got both whammies. It's in China, and it's got the Crimean event. So regardless, if I'm right or if the market's right, it loses. So both issues touch it. So I want to go long it, but I'm not going to catch that falling knife soon, though. This is a really well held up level before. So, and here's the funny part. I was going to overlay and jump into Goldman Sachs. Now, look at this chart. Look at this area right here. Now, close your eyes, and I'm going to reopen them. I switched to Goldman Sachs. So, somebody said recently the financials finally joined the rally right up here. Let's go, buy, buy, buy. And now everybody's saying, oh, I saw it coming, the sell-off. I saw the sell-off coming. Nobody saw this coming. Okay? If they saw it coming, why would they say buy, buy, buy up there? Here's the reason why I'm not catching that knife yet. It is, I want to go long it. They ask me every time. Yeah, I do want to go long it. But if I go to 2 year, that's a level from which it's been a rooftop. So I want to see that it holds as support. Okay, and it doesn't. And plus, it's starting to look head and shouldery. Maybe not technically exactly, but the spirit of it. So I want to see it to hold that level. So I'm not jumping in yet with that one. It is on my shopping list, but not for next week, I don't believe. Okay, back to. I did look at Buffalo today. Okay, I can't touch it. It's at highs. It held up well. I'm not a buyer of highs. Here's an interesting one, CF. Why do I say it's interesting? I've been seeing a whole bunch of SEC papers going back, insider sales, offering notes, this and that. So for me, from a credit spread perspective, it's in the penalty box. I threw it in the penalty box, and here's what happened just after the close today. Okay, let me see here. 265. Don't know what the news is. I think it's got a good write-up somewhere. That's the reason I don't touch it via credit spreads. Yes, if I was long it, I would have made gobs, but I'm not going to. Guess if I'm missing a piece of the puzzle, I don't want to play. Okay, that's especially with credit spreads. CMG, a recent breakout, held okay, flagging with a doji. It's a no to touch right now. Not that it's going to break down, but like Amazon, I think it can run up, but it's in the stratosphere, and the market's in perceived stratosphere. Why jump in? Double whammy. CRM, I've been telling people not to buy and catch it here. I believe Kramer did say go ahead and buy it. I thought it was too early. I wrote up an article for the members, and I posted it also on Twitter. And yes, I was wrong for a couple of days, but then clearly the sentiment was down. And this is the move I was waiting for. If you look up my post, you'll see that I drew, the three big moves that it had. They're almost equal. This guy. Just eyeballing it. It wasn't science. It was just common sense. And it was kind of heads and shouldery, but this will probably have satisfied that. And now it's at a level where it's had recent bounces from significant drops. Like this is a significant drop, and it kind of recovered. So now I can start looking at a credit put spread here, or maybe a call spread, or maybe just plain out call for a lotto ticket on a big bounce. Equinix, can't touch it. I mentioned last week that I was seeing a nice trend, but it looks like it wants to decide whether to break or not to break. This was the trend I was talking about. And guess what? It broke. And now I have nothing to shoot for. This is recent bounce, but in this stock, I can't touch it. FDX, it's in the stratosphere. I haven't looked at it today, but I can't imagine I would do anything with it right now. I don't have any information about it inside or any one way or another. There might be some sort of a report soon too, so I'm not going to gamble on that one. Google is a heartbreaker today because I think it's a name that just was used to as a piggy bank to raise some cash, to cover butts. It has excellent, let's say it is China. Google doesn't do business in China, so it's not going to affect its P&L tremendously because it unofficially does a little bit of business, but it's a small part of its income. It should be. And if it's the Crimea issue, then we should resume, at least stop the selling next week. And again, Monday is pivotal. I'm going to repeat it over and over. We already looked at Goldman Sachs. How about IBM? IBM, yeah, I don't like this format at all. Head and shoulder coming about. It's not there yet. It's looking like it wants to be there, so I'm not touching it. Plus, the street doesn't like it recently. ISRG, same thing, broken up trend, kind of like Equinix, and that's an equally as violent stock, and it has headlines going against it, so I'm not touching it here. I wouldn't go long it. I wouldn't short it either because it's a crazy stock. LinkedIn, I told you before, I wanted to buy it down above around 180. It never got there. Maybe I'm getting my chance here. This is Doji knocking on lower levels, so it doesn't hurt to wait another day. It will rip on Monday if everybody settles down. If not, I could get my chance and get long at around 180, or if it comes close to it. Lulu today, I believe, was green, strangely, but this is a dangerous level. And if history, let's pull up some more data time. Yeah, I think we need to go further than that. So it is, the big picture is, I don't know anything about how it's going to go from here with regards to management. They're new and all of that. So I will sit on the sideline and miss another run up. I don't care. MasterCard today, like Visa, is at an important level. I want to go along both of these, and I think they don't deserve to be sold on these. I mean, they're not going to make any less money regardless of what happens on Monday. So I want to go along them, but those candles are not pretty. So I will wait. Netflix, too hot to catch a knife that fast. I mean, this is a fast runner. I don't want to try and catch that knife. This is a fast runner that I would try to catch that knife because it's Priceline, and when it comes down to it, it actually makes money. It prints money, and it's global, and it's not over centered in China. It's European driven, which has been good news in Europe recently, relatively. So next week I may play a credit put spread or even a debit call spread or both for a bounce. So if we don't fall apart on Monday, this guy will run and recover, in my opinion. And I actually dipped my toe in the water here, and I took a credit put spread low in the 1200s. Not at the peak time that I could have done it, but enough income, potential income. Panera, can't touch that. Flagging like you wouldn't believe, and I can't touch it. Ralph Lauren also had a good day. Actually, it was pretty good, but then it retracted a little bit. I don't know what's going on there. I'm staying out. The SPY in general is, I mentioned, it was starting to look like that inverted ascending scallop, although I'd like it to see it a little smoother than this. It looks like an ugly candle, but I don't think it foretells anything because it's all in anticipation of a binary event. Volumes are not that crazy. They are high. In Google, I didn't mention that volume was completely in line with normal. So it's not like this panic selling. It's just a chug, chug, chug. See, we've had prior dips that are bigger, and they were based on higher volumes. So no panic, just chug, chug. People raising money in order to avoid a weekend. So I'm gonna try to catch a few knives next week. Do a few credit put spreads, maybe a few debit call spreads in the names I just covered. But I will also probably play a few defensive hedges, meaning I won't do credit call spreads, which are bearish the market because I don't dare short anything at this level. But I may do a few debit put spreads strategically placed, maybe even in the money in order to do some premium arbitrage, just in case I'm wrong about it. They don't lose their value as quickly, and they have a chance of, as time dwindles, they keep some of their value because there's less time for them to get out of the money. Hopefully that made sense. If not, hit me up with a message. I'll answer it in plain, simple English there too, or detail, I should say. Again, this is Nick from marketfi.com for Benzinga. Thank you for your time, and sorry about the length of the video.